Hi everyone, here Brian Coester, Coester VMS, talking about Fannie Mae. So what's going on with Fannie Mae and the upcoming notification that they will be allowing purchases and refinances with no appraisals. So this should not be, any shock to really anybody who has been following what the GSEs have been doing on a regular basis. At the end of the day, this is something that has been well established and something that has been talked about for a very long time. So the idea that this is new with underwriting, collateral underwriter, and all the data collection and the talk of BPOs or alternative valuations, it should not be a surprise. But nonetheless, when it actually happens, it's a little bit different. And so what is actually going on? So basically, Fannie and Freddie have both agreed to allow appraisals waived on certain type of inspections on our certain type of properties. So certain type of one-unit properties, including condominiums, it's limited cash out refinances. So they'll go up to 90% LTV on homeowner occupied and 75% LTV on investment properties. Cash out refinances, they're doing up the principal residence of 70% LTV, and then second homes up to 60% LTV. And then purchase transactions, they're going 80% LTV. So it's an 80% LTV. And I'm going to go ahead and try to put this on the screen for everybody so you can see it. But basically what they're doing is they're enabling certain types of purchases and certain types of transactions to be done without an appraisal. So if I'm an appraiser, what does that mean to me, right? Like if I'm an appraiser, what does that mean to me, right? So here's an example of what they're doing, so you can see that. So if I'm an appraiser, what does that mean to me, right? Well, I mean, first and foremost, what percentage of transactions are going to meet that requirement? Right, so very few purchase transactions are going 80% LTV, and the savings of the, money here and there is not a significant savings. I mean, it's definitely a savings, but it's not a significant savings. And then also, you deal with a situation to where what is the long-term risk or the long-term consequences of doing something like this? And so personal opinion, right? So 70%, 60% of the loans being done right now are purchases, right? And then out of those, very few percentage, less than 5% are going to be eligible, from my perspective, just based on some rough numbers, for this type of loan. On the refinance, you're talking probably 10% of the refinances. So very small percentage of the market. But personally, what this is not necessarily, the biggest sort of concern or the biggest sort of thing to be looked at. What to be looked at is the general direction of the appraisal industry, and the general direction ultimately, from my perspective, is going to go to some sort of hybrid when it comes to desktops. Desktop appraisals being used more consistently with some field inspection element present. All right, now that field inspection element being present could be done by anybody. Personal opinion is that would be a nice, if we can get the state law changed, that would be a very nice place for appraiser trainees to land. You think about the idea of a desktop form. You think the idea about having, a new next generation of appraisers. You think about the idea of having, somebody go out and inspect the property who's qualified, who has some state licenses. There will need to be some changes at the state level. However, I think personally the best scenario going forward would be the standardized desktop. I already have a clue that Fannie's working on a desktop form. So standardized desktop product with an inspection that can be done by a trainee. And then you have a certified appraiser who is doing the actual analysis and work. To me, that's a combination of both, right? Where you don't necessarily eliminate the appraiser, you don't eliminate the trainee, and you land it in a good mutual soft spot. The idea that the appraiser is going to be gone from the transaction just doesn't make any sense. It is not realistic. The idea that Zillow or an AVM is going to take place just doesn't fundamentally add up. And the reason simply is because the quality of the data is the most important thing when it comes to the accuracy of the valuation. So if the quality of the data is not good, and you're dealing with a situation where the data itself is inaccurate, and not only is the data itself inaccurate, but there's been, the market has skewed. You're going to put yourself in a situation where, you just common sense, right? So you have a house that's worth $200,000, $300,000. Well, in that neighborhood, let's say the appraised value and the appraised value would be 300 grand. You're going to have comps from 280 to 340. Okay. And that might represent that particular set in that neighborhood. But then you'll have comps from 330 or 320 to 380. And you also have comps from 280 to 240. Okay, so if you look at the overall similar characteristics, there may be variations in the age built, there may be variations in the builder, there may be variations in basic amenities. Well, what happens is over time, as properties age, those get blended into basically the ones that have been maintained well and updated and renovated, and the ones that have not. Okay, if you deal with a situation to where everything's automated, initially, you would have some accurate valuations, okay, because the data's good. But then what would happen automatically and just by nature, you would have some properties that should have been appraised for 300 that start getting skewed unintentionally into the higher range, or start getting skewed unintentionally into the lower range, right? An appraiser doing a desktop appraisal without an inspection may not even catch that. Like, as an appraiser, and my dad was an appraiser, so I grew up going out and doing inspections. I used to do inspections for several years before converting to the AMC, and you run into a lot of situations and problems when you're doing desktop appraisals. I mean, it just becomes one of those things where you're really shooting in the dark, and there's a lot of assumptions, and there's a huge range in any given neighborhood, and as a result of that, you're just not set up as well when you have the inspection. Not only that, there's information you need that you need to work with somebody consistently on to get that information. Meaning, like, if we had, and we could do this, a realtor go out and inspect the property and take pictures and then upload that and have an appraiser look at it. The appraiser needs somebody they're working with consistently over time to trust that the information being provided is accurate, to trust that the information provided is what they actually need, and then, and at a certain extent in real time, be able to say, okay, I went out to this property and here's what I saw. And therefore, how am I going to address this? How do I take pictures of this? How do I fix this? What do I do? All of those things don't happen when you're just doing the desktop, or when you really think about it, the appraisal free mortgage. Now, everyone can say, we have the AVMs, we have this, we have that. Why don't we just go ahead and do it? Well, the reality of the situation is they've had AVMs for a long time, and they like to think that they're getting more accurate. And Google or Zillow's error rate, I heard them went from 20% to 5%, right? So they're within a 5% variation. But the thing is, the 5% variation is generally speaking wrong, right? Like, I mean, we do hundreds and thousands of appraisals a year, right? Like, it's generally speaking, if we compared, we've done this, it's off. And it's not only off by a listing, it's off by sales price. I mean, they generally don't add up. And so when you think about the idea, I mean, the publicly traded company, that's all they do. And not only that, when you look at the idea that over time, see, the thing is, right now, The appraiser's job is to take the punch bowl away when the party gets too crazy, right? When you look at that, that has inherently created a conflict within the mortgage banking space that they don't necessarily like appraisals because of the AVMs. Well, there's a huge difference between you not liking an appraisal and an appraiser that went out and physically inspected the property, came up with the best estimate, and for whatever reason just didn't have the deal done, right? There's a huge difference between that and arguing with an AVM, right? Like when the AVM spits out or the automated valuation spits out $450,000 and you think it's worth $475 or you think it's worth $420, you're purchasing that house at that price, right? This is not like, you got to understand, if you decide to buy a house for $450,000, generally speaking, the 3 to 5% of appraisals that come in below the purchase price, those 3 to 5% represent a significant savings to the consumer and a significant savings to the mortgage banking industry. I mean, the difference between buying a house worth $450,000 versus $430,000 or $420,000, when you multiply that by thousands and thousands and thousands of houses, is a huge deal. There's also a huge difference between an AVM coming in at $450 when the house is worth $430, or an appraisal coming in at $430 when the house is worth $430, or coming in at $450 when the house is worth $450, in the terms of accountability, and in terms of structure, and in terms of having another set of eyes and ears on it. And the thing is that relatively speaking, and then they said, the guy, say $500. That's about the lowest fee price per item on the within the mortgage industry. I mean, I've seen, some people charge $80 for a credit report, or the average fee within the mortgage industry is something like $20,000 per loan. So $500 the borrower has to pay. Now, here's the thing: there is a legitimate case in the sense of it creates a barrier of entry, and you can't be dismissive to that. But at the same time, that barrier of entry is small relative to the idea of you paying 20% down or 30% down, but also it's to protect the consumer. So let's do this. Let's, if you have any questions, just go ahead and email me, bcoester, coestervms.com. If you want one of these cool coasters, go ahead and email me. Keep the comments positive, and everyone have a great day.